Hi, adventurers. We're back. This episode, I am thrilled to introduce you to Armond Davis of the Paragon Group. He has an incredible story to share. He has amazing expertise to share with you, and I cannot wait to dive into his amazing wisdom. But before we get started, I'd love to tell you a little bit about family. Family helps you take control of your fertility journey. Couples are waiting longer to start families nowadays, and that brings a lot of challenges with it. So, with family, gone are the days of trying for months until you can visit your OBGYN about fertility challenges, only to be sent straight to invasive and expensive IVF treatments that often aren't necessary, surprisingly. So, family offers you the opportunity to access fertility treatments through telehealth, at home labs, and customized protocols at home. You can get prescriptions and all the things that you might need before you go to IVF. So we can take control. Women can treat critical hormonal imbalances, ovulation challenges that they often aren't even aware is impacting their fertility, putting the power back into the hands of the couple. So, Adventurous Podcast listeners can use the code ADVENTUROUS. Make sure you check the spelling for $100 off your family fertility program. You can find the link to learn more about family and get this offer. It will be in the show notes or on our website at adventurouspodcast.com. So, all right, Armond, you're here. Yay.
I'm so happy to be here. I love the conversations that we have had offline. Looking forward to having another great one here today.
Likewise. Yes, we met through the Sutton Capital little
Yes,
community, which is
yes,
very,
yes.
I've met some great people there so far. So I'm excited to meet more. So share a little about yourself. Armond has a very interesting background because he, like all VCs, didn't come into VC the quote unquote typical way. I don't even think there is a typical way, but so share a little bit about where you came from. Tell us about your journey and what inspired you to become not just a venture capital investor, but the type of person who is a venture capital investor that you are today.
Uh, that I have never had the question phrased that way.
Yeah. You like
It
that?
certainly, well, yeah, it makes you think about it from a different perspective.
Mhm.
But as you said, nobody comes to venture through the traditional way. There's just a handful of people who actually came out of business school, worked at a big VC firm, did deals on behalf of that firm, and then just
Yeah.
left and raised a fund and started doing their own firm. A lot of us come from different places, so I'm no different.
Mhm.
I was born and raised in St. Louis, and loved my family and loved my childhood growing up. Went down to Florida A&M University to get both my undergrad and my MBA
Mhm.
in finance. And then after that, moved to Atlanta. I worked for Goldman Sachs for a while. I then worked at SunTrust Bank for a while as
Mhm.
well, which is now Truist. But around 2005 or so, I started to really think about what I wanted to do for myself. And so that was really the impetus for me in the beginning of a really long journey. So my first instinct was what I wanted to do was to start a hedge fund. It was 2005, 2006. I was getting really into technical analysis, and I
Mhm.
saw this huge Head and Shoulders top forming. And I said, you know what? I should leave and I should start a hedge fund and I should short the market.
Mhm.
And in a moment of really a moment of doubt, I really thought to myself at the time, I was 27 years old. Nobody's going to give 27-year-old Black man that doesn't have an Ivy League education $20 million so he can short the market and all coming off one of the biggest bull runs in history.
Mhm.
And the truth is that I convinced myself that this was impossible,
Okay.
and I never even tried. I never even asked anybody for the money,
Okay.
and it was a tremendous lesson for me that when the universe puts something on your heart, puts something in your mind, you already have the tools to execute on it.
Mhm.
And so you should just move, and you'll be amazed at how the universe will open pathways for
Rearrange
you.
itself.
That's right.
Things.
That's right.
Yes. Mhm.
The universe doesn't want any of us to fail,
Yeah.
right? And
Mhm.
so when you're given an idea, it's because you have the tools to actually turn that from something that's in your mind to something that actually exists. And so that was a huge lesson for me in that moment. So instead of trying to raise a hedge fund, what I did instead was did my first M&A deal. Went and
Okay.
bought a small construction business,
Mhm.
and I would say that in 2000, that was in 2006, late 2006, I did that. 2007 was a fantastic year. I thought I was the smartest guy in the world.
Every
And
story starts with this, like, I thought I had this.
oh, listen, you have to be
Classic.
a little bit, especially in
Mm,
VC, right? You
mhm.
have one VC by nature is an optimistic
Yes.
practice, right? Because
Yes.
you're investing in something that is in one state with the confidence and the optimism that it's going to be better, it's going to get bigger, it's going to get better, right? And so, yes, I absolutely in 2007 thought I was the smartest guy in the world. And then 2008 happened that I was no longer the smartest guy in the world.
You and many other people weren't the
Me and
smartest
many
people
other
in the world
people.
anymore.
Yeah, yeah.
Mhm.
By 2010, 2012, I was on the verge of bankruptcy.
Mm,
I lost my home. I lost my marriage,
mm,
and really was just at a point in a place where I was just going to go and file for bankruptcy and go crawl off in a hole somewhere and die. And
mhm.
that's really kind of where I was with things. And I pulled my last few dollars out of my bank account to give to the bankruptcy attorney to file for me, and drove to the bankruptcy attorney's office. And when I parked and got ready to open up the door to get out and go in, I just couldn't move. I was totally paralyzed. And I literally sat there in the parking lot of the bankruptcy attorney's office with my hands at 10 and 2,
Mhm.
staring straight ahead out the windshield for an hour and just could not move. And
Mm.
so after an hour, I really just couldn't continue to sit there. And so I said, you know what, I must not be meant to be here. So I need to go home and try to figure this out. And so I did. I went back home, and I at the time everybody's getting laid off and companies are laying people off. But I went the opposite way. And what I did was I empowered my employees. I told them, hey, each of you guys have a business that's really just under my business. So if you guys can create, revenue opportunities, if you guys create savings, cost savings opportunities, I'll share all of that with you. And
Mhm.
I'm happy to say that we came out of the recession stronger than we went into it.
Wow.
And not only that, but I never laid anybody off, never had to lay anybody off.
That's a great
And
turnaround
so
story. That's
that
great.
was it was really rewarding, but it was something that, in those moments you feel like, man, why is this happening to me?
Yes.
Why is all of this happening to me? But it was all things in preparation. Things don't happen to you, they happen for you, right?
Mhm. Mhm.
And so fast forward, I'd owned and operated a couple of other businesses ranging from import export to content creation, marketing consulting, but always wanted to get back to investments. And so, in trying to merge my investment knowledge and experience with my operating knowledge and experience, venture was a natural segue for me. And so I launched the Paragon Group last year. We invest exclusively in female and ethnically diverse founders. And so our thesis is very straightforward, is that those two groups are the most oppressed by current society, the most
Mhm.
disadvantaged by current society.
Mhm.
Therefore, they will lead in the innovation that will move society to more equitable systems. And so, if you can invest in them at an early stage, then you'll make above market returns. I think it's very straightforward. I think the
Mhm.
data bears that out.
The data does bear that out, and it's funny that we have to call them groups because we're actually the majority, but
Mhm.
it's underrepresented and female is actually the majority, but it is true. And, I remember back when I first started a, a loan fund, a nonprofit back in the day called Accelerate Fund.
Mm,
That we were trying to tell people that women were not receiving access to funding, who venture
mhm,
fundable women who were running companies that were venture fundable,
mhm.
were not getting access, and people didn't believe us. They did not believe us.
What?
Yeah, yeah. This was, now it's all over headlines and everyone knows it, but back this was 6 or 8 years ago or something. We had to prove
Mhm.
it, so we actually
Oh,
had to
wow.
start yeah, it was just, I don't want to go into all of this, but yeah, people didn't believe us. And so yeah. So tell us a little bit about, you're doing this really incredible work with founders, and you've got this origin story here of, how you coached yourself out of a difficult time and was able to turn that around. So, when you're working with founders and, you're investing at seed as well,
Mm-hmm.
these are some of the hardest times for an entrepreneur. It requires intense amounts of resilience, and most VCs that I know don't provide coaching and and resilience, and this type of mindset. So share with me a little bit about how you work with the entrepreneurs, and what kind of experiences that you have had doing that work with them.
Well, I think that really the key is, especially as you mentioned, you're talking about pre-seeds and seed stage.
Hmm.
Businesses are heavily founder dependent,
Yeah.
right?
Hmm.
And so one of the things I say to the founders that I work with is, your business can't outperform you. So
Hmm.
if you can only function at a level 4 or 5 as a person, your business is going to function at a level 2 or 3. And so the key to really unlocking value in an early stage business is to have a founder who's functioning optimally.
Hmm.
And so
Hmm.
we can talk about EBITDA, and we can talk about ARR, and we can talk about P&Ls. And I do all of that, and we work on all of those things. We can do that. But the real key here is the founder. And that's why I say I'm very founder driven.
Hmm.
And so that's the most important part of things. And so I'm working with founders on overcoming things such as imposter syndrome,
Hmm.
survivor's remorse,
Hmm.
unresolved childhood traumas that, for those big league fans, that cause you to have upper limit problems. And so
Hmm.
we are really working on, when those negative thoughts come into your mind, develop a system, develop a process for how to challenge those thoughts. Because it can't be something that you can't, I can never scale enough, right, with the business if every time that happens, you have to call me.
Yeah.
And so it's
Hmm.
about arming the founder with the tools to be able to challenge their own negative thoughts. Why do you think this now? Why do you think that you don't belong in this room? The evidence that, if you really step back and look at it, is completely to the contrary. You deserve to be here. The greatness is in you. And so that's a huge part of my approach in terms of working with founders. And no, I coached myself a little bit, but no, there were always people that were there that were pouring into me and were really helping me and believed in
Hmm.
me in those really dark moments. And so I really try to be that for, especially for underrepresented founders. I
Yeah.
really try to be that for them. And in return, I do also require that if I invest in you, then you will mentor another founder who is either in your geographic area or in your industry, because we're all really just trying to be vessels here and pay things forward.
Hmm. It's interesting. You talk about the unresolved childhood traumas, and
Hmm.
I find sometimes people always just kind of want to think like business is exempt from, the other emotional aspects of life. We can examine unresolved childhood traumas when we're having relationship problems. We can examine those traumas when, there's some people who have like
Hmm.
relationship with food and those types of disorders. But when it comes to business, we should all be just like very, oh, of
Oh
course,
no, it's
and
nothing personal, right?
no, right.
It's just
Yeah.
business. It's nothing personal.
Yeah, and I just find that's so silly because this is actually one of the most emotional things that you can do, especially as entrepreneurs, because we are creators and we
Hmm.
put ourselves into a business just as much as we put ourselves into a
Hmm.
relationship. And I see a lot of stuff about imposter syndrome, of course, and I feel that a lot myself. And
Hmm.
people will just sort of say, just tell yourself, you deserve to be here. And you're like,
Right.
yeah, so that doesn't, so it takes doing the inner work of drilling in.
Hmm.
Why do I believe this? Why do I believe this? Why? And you get down to it and you're like, oh my gosh, when I was a kid, my parents told me X, and like, but if you don't,
Yes.
I think
Yes.
there's even more of a block in business for people going there. And I know I recently had to share a couple of things that were sort of going on with one of my investors. And he was like, oh, why don't you tell me? And I had to be like, well, to be honest, my mother taught me when I was very young. that, like you always take care of your investors and you never come to them without a solution. So I didn't want to
Hmm.
come and tell you that I had a challenge, but I didn't know how to fix it because I was taught at a very young age that you have to like fix it, fix it, fix it, and so it's like a childhood thing that was keeping me from
Absolutely.
communicating what I should, you know.
Yes.
And he was like, "Oh yeah. Yeah, I see that. Yeah, you can come to me when you don't know the answer." And I'm like, but still have all this fear about it,
Yeah.
you know.
Well, and look, that's the reason why, in my opinion, especially as a founder, and contrary to publish, you're a founder too. You're
Yes.
just your startup is just a startup that invests in other startups. So you're a
Yeah.
founder. It's like you're a
Inception.
founder too, right? Right. There's layers and levels to it, and
I have a
time moves
startup that
different.
invests in other startups to start startups.
Yes.
Yeah.
Listen.
Mhm.
But you go through a lot of the things that founders go through,
Mhm.
right? And so it's important to understand, 'cause for me as an investor, my whole purpose in being here is for you to come to me and say, I'm really struggling with this, and this is really challenging, and I don't have the answer. Can you help me and find the answer? Right. And so,
Well, because you learned more from your failures than you
yes,
probably got from your successes. Successes are like, "Cool, we're gonna buy a nice bottle of champagne at dinner tonight. It's gonna be great."
right.
The failures are what make you so wise and so resilient, and I will often tell founders, "I don't know how to make you successful. I think
Right.
it's luck." So we're going to work really hard and we're going to do everything we need to do to make sure that we are in the best possible position to get lucky. But
Oh,
I can tell you how to fail and I can make
yes.
sure we don't do the things that will definitely cause failure. But I can't really tell you how to be successful. It's like, hey, let's grow, let's get customers,
Hmm.
but will that get you to the acquisition or whatever that is? We sure hope so. But, at the end of the day, don't fail is the first, you know, I think
Well,
rule of seed stage companies is don't fail.
don't fail.
Mhm.
Well, one, there's no such thing as failure, right? There's only lessons and blessings, we say,
Yeah.
right? Only lessons and blessings. So no such thing as failure. Two, what you said is so important because it the word that it goes to and points to is process. And so when I'm working with founders, when I'm looking at founders, one of the things that's important to me is I want a founder that is results oriented, but not results driven.
Oh,
What I
interesting.
mean by that
Yeah.
is if you are just looking for the outcome, the
Mhm.
positive outcome, sometimes you get a positive outcome even though your process is flawed. And if all you care about is that you got the outcome you wanted, you don't actually pay attention to the flaws in your process.
Mhm. Okay.
And what
Yeah.
happens is as you grow and as you scale, if you continue to have flawed processes, they will eventually rear their head. And it's much harder to correct those things once you've gotten to a certain size, right?
Mhm.
And so when I say being results oriented, you want to be building a process that aims towards a result. That doesn't necessarily mean that you always get the result that you want, but but your goal is to actually try to perfect the process, whether it be client
Mhm.
relationships, whether it be investor relations, whether it be how you analyze or assess your risk. Develop a process, be process oriented. And what you'll find is that that process over time will put you in the position that you described, where you're in the position to be able to take advantage of the opportunity. And they say that luck is when preparation meets opportunity.
Mhm. I think that was a hard lesson, one of my hard lessons of 2023 so far,
Mm.
is that, there was something that happened before we had the fund, before I had
Hmm.
process, before I had structure, before I
Hmm.
had some of the support that
Hmm.
came to light. And I was like, wow, that was a massive flaw in process. Like, whoa, was that a flaw? I didn't know at the time
Hmm.
that it was a flaw. And I had to, one, try to have grace for myself and say, I did the best thing I could. at the time with
Mhm.
what I knew, the information I had, and the support that I had. Now I know that was real bad. And, you know, and now the problem has to be fixed, and it was not easy to fix.
Mm,
But it really showed me you got to pay attention to this stuff
that's
and
right.
your processes, your support, your structures, your team, and just think about risks at each stage. And so it's almost, we're optimistic. We don't like to think that things are going to go wrong. We only like to think that things are going to go right. And most of the time
Right.
they go well.
Mhm.
But this was like a really hard lesson in realizing not everyone is your friend and not
Yes.
everything is going and you need to protect yourself. And I think, I see a lot of early stage companies, I do a lot of cap table work with startups where I just look at it and I'm like, this one thing could happen, which is
Mhm.
relatively likely to happen, and it will take down the whole company.
Yes.
And you just want to be like, let me help you, and sometimes they won't, and it's
Sometimes they
very
won't.
painful to watch that go down. Um,
I
when
have it's really hard. It's
Mhm,
really hard. I have that's a huge another factor. So I'm talking about the factors that we kind of are
mhm,
inadvertently going into my process, right? In terms of when I'm meeting with founders and looking at founders is, are you coachable? Do you actually
mhm,
want to learn? Or do
yeah.
you just want me to give you a check and get out of the way?
Are they
Because it's
saying the words they think you need to hear in order to
yes.
get the check so that they can move on? Yes,
Yes,
exactly. Mhm.
absolutely. And you learn over time as an investor to discern, right? And
Yes.
I recognize those phrases and those words where you're just trying to get me to give you a check and get out of the way versus someone who's really earnest about trying to learn and trying to work through these things. Because listen, we all come to the table with trauma.
Mhm,
It's a part of the human experience, right? And
mhm.
so I'm not looking for someone who's trauma free because
Yeah.
there's no such
Mhm.
thing.
Yeah.
And someone who actually would present themselves as such is not being very genuine, right?
Mm,
And so it's about how you think it through,
yeah.
right?
So I'm curious, a tale of two entrepreneurs, right? Let's say you're
Yeah.
hearing two pitches today. The first one comes to you and sits down similar to this format, and what is that interaction like where you immediately think to yourself, pass? Because this person's not coachable. They only want the money. They're not, they don't like all the check boxes that are a big no.
Hmm.
And then the
Well,
next
first,
subsequent one is what would make you say, we're going to the next step.
right.
And yeah.
So the one thing, if you haven't done any research, like you don't even really know who I am.
Yeah.
You know what I mean? Like
Hmm.
I'm just a guy who could write a check, basically.
Hmm.
So you don't know who I am. You didn't listen to the podcast I did with Genevieve last week. Like you
Yeah.
didn't, it's
Read
that
the
those
website and see that
right.
you invest in
Haven't read the
underrepresented
website,
entrepreneurs. Yeah.
anything along those lines, right? Number
Yeah.
two, a huge part is like I said, think about the process. Have you thought about things? 'Cause I'm the anti VC.
Hmm.
So I tell founders all the time, like, don't take VC money. Don't take
Hmm.
the money.
I do
The
too.
money's extraordinarily expensive.
Hmm. The first shot of heroin. Do you really want to
Listen,
be a heroin addict?
once
Yeah.
you start to take it,
Hmm.
you can't stop taking it
Hmm. Hmm.
because you need it to scale in order to provide the returns to the people who were in early.
Hmm.
And so you need to build your business from the end back to the beginning.
Yeah.
If you're building the business
Hmm.
as you go from the beginning now, it's a pass,
Hmm.
right?
Hmm.
Because if you're at a point where one, I'm going to say, capture all the low hanging fruit that you can possibly capture. The best way to raise capital is to grow revenue.
Hmm.
So let me see that you have actually thought about all of the ways that you can capture revenue without VC money. And have you attempted those? Are you trying to do those things? How are those things going for you? Okay.
Hmm.
Then from there, if you've done that and you're at a point where to take the big leap, right, you do need this $1 million check from the VC, then
Hmm.
you really have to think about how you're going to how you're going to give that money back,
Yeah.
right?
Hmm.
Because
On a multiple.
I was just like, the truth
Yeah.
is, if I give you $1 million
Uh-huh.
today,
Hmm.
then I'm expecting you to write me a check somewhere in the neighborhood of $5 million within the next 5 years.
Mm-hmm.
That's the truth, right? If
Mm-hmm.
you only give me, let's just say this is how challenging VC is. If I give you a check for $1 million and in 5 years you give me a check for $2 million,
Fail.
fail.
We don't have another fund. People don't realize I'm out of a job.
That's right.
If
I'm
I produce
fired.
2x,
That's right. I'm
packing
fired.
up. I'm starting a popsicle stand in Mexico because I have no future in this industry. If people don't know, even if I produce 3x, it's like I'm gonna have to do a real song and dance to, and that's even, I probably am still at the popsicle stand.
No, and that's especially true, right, for a female fund manager,
mm-hmm.
or for a Black male fund manager like me, right?
We have to outperform.
You've got to outperform. And so if I give you $1 million, right, you need to be writing me a check for $5 million within the next 5 years. And you need to, by the time you ask me for that $1 million, you need to have already thought about how you're going to get that to me. I understand that it's not going to go exactly like you planned, right? But I need to see that you've thought about it.
Yeah. And it's not just, I need your money today to keep things
moving forward.
What you're talking about is the methodology and the practice that we taught at Expert Dojo, which is revenue first. If you've got the revenue, the investment will come, and doing the exercise like you're talking about, future back. What's the future of this company?
Right.
And what are we doing now in the next? And how does that break down? Weekly tasks, monthly tasks, in order to get to that. Because fundamentally, to get to $1 billion in evaluation, you need to grow average 12% month over month.
Right.
So, really what we want to see is a more increasing ramp in the early stage, because that will, level off a little. But when you say, okay, so to get to that much growth, or, let's say we decide we want, 100% growth month over month or whatever, it breaks down to fundamentals. Yes. And if people can't think through that, then why do you have a business? Like, how many calls do you need to make? How many emails do you need to send? It really comes down to those simple things. And when you bring that up and they're like, well, excuse. And like, oh my God, this isn't going to work.
Right. So that's a huge red flag. Then we go into, like I talk about the mental aspects of it. Because like I said, like you said, those are quantitative. Like you got to make the calls. You got to do the emails. You got to think through the numbers. You got to think through the revenue. You want to hit a certain multiple, but it really is, how are you approaching your life as it pertains to your business?
So what kind of questions do you ask when you're drilling in with people to find out?
So it varies.
It
varies depending on the founder, depending on the business, because one, working with underrepresented founders almost always have created the business not as, well, I see that there's a whole bunch of people doing this and I think I can make $1 billion. It's almost always some type of personal meaning or reason for it. I say all the time,
that's the same in health too, even if they're not underrepresented. It's the same in health.
Yes, absolutely. And so one of the things that I do is I try to lead with empathy. Myself, as an investor, I understand that there's really no such thing as a business decision when you're talking about a startup, when you're talking about a pre-seed, even a seed stage business. All these decisions are personal decisions, because your life is on the line, your livelihood is on the line. There are times that you're making choices not to spend time with your spouse and your children in order to work on this business. So there's no such thing really truly as a true business decision. All of the decisions are personal. So have you thought about that? Are you considering that? Are you suppressing your feelings or your emotions in order to try to make those decisions? Or are you allowing your feelings, your emotions to completely take control of you? And that's what I mean when you find people that are just lurching from result to result, instead of focusing on developing the process. So there are ways that you ask questions without asking questions. It's how you answer, how you respond to me saying, are you willing to be a mentor to another founder? That lets me know whether you are community oriented. That lets me know whether or not you are a multitasker. Because if you say, no, man, I just got so much stuff to do trying to run my business, I don't have time to talk to anybody else. Well, okay, everybody, when you understand the importance and the significance and the impact, when you understand the reward that lies in helping someone else and being of service to people,
Mm-hmm.
then that indicates that you get it, right?
Yeah.
And you should start your business with the purpose of being of service to people, whether it's a product, whether it's a service that you're offering. You have to be the reason for its existence is to be of service to a consumer.
Mm-hmm.
And so those are the kind of questions that I'm asking, but those answers that I get answer 3, 4 other questions that I don't ask.
Yeah. It's almost like, are you in integrity? Do you,
Hmm.
like if are your actions and what you say aligning with who you are in the world, and is what you are in the world aligning with what you're producing? Because
Hmm.
if there's anything that's out of integrity, it almost always comes out somehow. And if
Hmm.
you then try to suppress it and try to pretend like it's okay or sweep it under the rug, then it blows up.
My mother had a saying that she said all the time that I've adopted. She used to say, "You might get by, but you won't get away."
Ooh, that's interesting. Explain
And
that.
so
You might
what
get
that
by,
means, you might
but
get by, but
yeah.
you won't get away. So you might be saying all the right things,
Mhm.
right?
Mhm.
But eventually your true integrity, right, will reveal itself,
Mhm.
right?
Mhm.
You might tell this little white lie over here, right, to
Mhm.
get to the next step, and you might get to that next step. But eventually, the universe will move into a way that reveals your true character, and you won't get away with it. So you might get
That was
by.
your grandmother who said that? Your
My
mom?
mother.
So my favorite quote, tell your mom this one. I think about this one a lot actually. It's Warren Buffett. And he said, and I think I've even said it on this podcast, but he said, when the tide goes out, you can see who's been swimming naked.
Ah,
And he kind of refers to
yes,
like the markets and, like what's not strong, but it
yeah,
kind of also means that like when the tide goes out, literally, figuratively, in
yeah,
markets, in your life, whatever's not really there,
yeah.
out in the open,
Oh,
you know.
so let's talk about
Mhm.
that. Let's talk about that from the perspective of all the corporations and all the entities that were out there. They were saying, "Oh,
Uh,
we're here for female founders. We're here for female fund
oh
managers.
gosh,
We're here for diverse
I
managers."
can't even, I have a soapbox about this.
Let's let's get into it. So
Oh God.
now we have, and really we started to see it last year, actually.
Yeah.
People, yeah, I see you're
Well,
watching
because it's
TV,
great
people say,
PR. It looks
"Oh
great on
yeah,
LinkedIn, make
yeah,
video.
yeah." And so people are like, well, are we going to have a recession? And I always take the point when people ask me that to point out there's privilege even in that question.
Hmm.
Because if you're a female founder, if you're an ethically diverse founder, you've been in a recession for at least a year.
Always been a recession. Yeah,
It's
like,
been a
I mean, it's always
recession.
been a recession. Like, I think
Yeah.
I told you this. I have a founder, and when the whole thing came out, and YC sent out their emails to everyone telling them to stop buying, all the Herman Miller furniture and return the Bugattis and all those and cut the burn rate and everything like that. We were in a bar at a conference, and she was in tears, and she's like, "Oh no," reading all these things, and I said, "This doesn't apply to you. Like,
Mm,
business as usual for you because you're already running lean, generating as much revenue as you can, exploiting every coin in the couch cushions in the office that comes in.
mhm.
Like, you're already, this is for the people who were swimming naked." And
Yeah. Yeah.
it's true. She's going to come out of this thing very strong, and those companies are gone. And,
Yeah.
it's just, it's like the only thing that I've noticed different about the markets is things are a little slower.
Right.
That's all.
Yeah.
Yeah.
Yeah. They're just a little slower. But
Mhm.
like we talked about at the beginning, the data is showing that we outperform the underrepresented founders
Mhm.
outperform, and that's only going to be more true because we know how to do more with less.
Well, and the best businesses, the best startups, and the best fund managers are minted during recessions.
Yes.
I believe that the funds that are vintage of this time are going to have the highest returns because not only did the managers who started them, but also the entrepreneurs who are investments in those portfolios are going to
Hmm.
outperform, and especially if they are underrepresented. And, if they're not, and then
Yeah.
they're returning capital actually in many cases, which is a little unnerving. But, one of the things too about the underrepresented um, investing VC conundrum is the people who are talking about how they support underrepresented entrepreneurs.
Hmm.
They are still systematically doing things the way that they've always done them. And the
Hmm.
issue of access to capital for underrepresented entrepreneurs and underrepresented fund managers is a systemic problem. So
Absolutely.
if the people at the top are making nice PR and maybe even having some good intentions,
Hmm.
but they don't systematically change the way that they invest, case in point, minimum check size,
Yes.
then they're only proliferating the problem. And, it's been a couple times when, I've explained this and they go, "Oh, I didn't realize that, a $10 million or $20 million minimum check was going to be too big for a first time underrepresented fund manager." It just
Right.
sounds like the silliest thing I've ever heard in my life.
Right.
Because I'm just like, first time underrepresented fund managers, including women, do not raise $100 million funds.
That's right. That's
We do
right.
not,
That's right. Or right, we could, if you would write the 10 to $15 million check, and then you get,
first.
but
Yeah.
then that's right.
Yeah.
That's
Mhm.
right. Or if you, but then you want to say, well, but I don't want to own more than 10% of the fund.
Mhm.
Okay,
Yeah.
so then, right. Well, then yes, I have to have
We get
$100 million fund.
Yeah, we get your concentration problem, it's diversification, all those things. But I just say, I get that you don't want to come in and do the work on due diligence to write a $5 million check when
Hmm.
you could do that same work on due diligence and write a $100 million check.
Hmm.
But the thing is that, dude, you are feeding into the problem, because that $100 million check is going to traditionally white male founders who are investing in traditionally white men,
That's
traditional,
right.
and at least in my industry, you know, women's health and health for babies and things like that
Hmm.
is like, it's appalling sometimes, the
Yes.
diagnostics that don't exist and the treatments that aren't there that I know are completely possible. They wouldn't even be breakthroughs if they were invented, but they're
Mm.
just not invented. And I've sat on calls with founders pitching like a women's health diagnostic, and all the investors on the call scratching their head, confused about why women need this when it's the number one reason that women visit their physician in the world. And they go home, they say, "I'm going to go home and ask my wife." And it's like,
I, I completely flabbergasted by that and
yeah,
exasperated by that. One of my portfolio companies, Mother of Fact, is owned by a
matter of
woman.
fact,
Yes,
she's on my schedule for next week.
nice,
Yeah, so she was
good.
introduced to me through one of my LPs, not even you.
That's
How
fantastic.
funny. Okay.
Listen,
Small
that's
world.
awesome.
Yeah.
That's awesome. So Emily is amazing. You're
Mhm,
gonna have a great conversation with her,
mhm,
but her business is literally about getting access to healthcare
mhm.
for women, particularly prenatal, that struggle with such common conditions such as gestational diabetes, which is wildly common, right? And
Yeah.
is a huge contributor to morbidity and mortality for pregnant women, particularly in underserved communities.
Mhm.
Her business is a complete total
Huge
no-brainer.
market, so much money to be made,
Yes,
of course, massive
absolutely.
impact. But when you pitch that to a room full of white men, they're not going to understand it.
Right,
And people invest in things they know, which
right.
is, you can't fault people for that. It's human nature.
I
But
fault them
I
because
fault.
I'm all because there's a ton of stuff that I don't know, but I'm always like, oh, I can learn something over here, or oh, I can learn
Yeah,
something from over there.
I agree with you. It's a blind spot. And I believe with great power comes great responsibility.
Yes,
And as an investor, that you know, you have great power. Therefore, you
yes,
have some responsibility. Now, how you choose to take it or exercise it, we can discuss that all day long, but you have some responsibility. And I think that the old school way of thinking is my responsibility ends with making sure I'm compliant with regulations and laws and making sure I return to my investors.
Right.
But the new breed of venture capitalists, so you and Alicia Hamp and, all these people we know,
Love Alicia. Yeah.
we know that, yes, we have to make returns. Of course, we have to follow the laws. We have to do all those things. But our responsibility is to create a world where it's better to live in. Like a, business. I think I was talking with Blaine Bartlett earlier. He says something like business is the possibility of the creation of a better world.
Especially venture.
Yeah.
Just by
That is our
definition.
business.
That is your business, right?
Mhm.
And so you think about the Fortune 100, at one point, almost all those businesses were startups.
Mhm.
And there was someone who said, I think this could be really big and impactful, right? And they invested. That was the venture capitalist, right?
Mhm.
It seems to me that over the past decade or so, that it's kind of gotten warped a little bit.
Mhm.
Maybe not even a little bit. It's gotten a lot warped. And it has been almost like a real estate approach to flipping houses.
Mhm.
Right. Well, okay, I can buy this house, I can fix
Yeah.
it up, put some paint, put a paint job on it, put some crown molding in there,
Flip it.
and I can flip it.
Mhm.
But
Brian at Expert Dojo calls it the microwave meal. He's
yeah,
like, why would you prepare an amazing meal when I can pull off the plastic, pop it in the microwave? Got a meal. It's food.
right,
And
right,
I'm like, it's true. He's like, 2 minutes. I'm like, and that's
eh,
venture capital.
right.
And that's what it's become. That is not what we want to allow it to continue to be, but that is what it has become.
Well, and the truth is, right, over time, you keep eating those microwave meals, you're gonna
You
have
get
some bigger
sick.
problems,
Yeah. Hmm.
right? And
And then we have
it's
people throwing lime bikes and bird scooters into the bay
right.
as the
Yeah,
microwave meal.
yeah, yeah,
Valuations
absolutely.
fast and growing, and it's just like some of these things are just wild. And there's a reason too. It's like we have all these satirical shows now about Silicon Valley, and it's like
Mhm.
because this whole thing is such a Ponzi scheme in a
Yes.
way. It's like satirical, and it's turned into that. So
Yeah.
yeah.
So no, but yet, so that people like you said, you mentioned people like Alicia, we are determined to bring this back to where it really is a calling. It's a vocation,
Hmm.
right? It's not a job.
Yeah.
And if you have the ability to help founders, whether it be in healthcare, whether it be like me, I'm industry agnostic, whether it be, and no matter where it is, but you have something that you bring to the table that is in addition to your investment dollars to help people to unlock their potential, then that's what your role is. And we're going to see a shaking out of those who are just check writers.
Hmm.
You got to bring something else to the table. You got to be able to, and that's why being an operator is so important. Now, I'm not going to go because you're going to get shouted down. We're going to cause a issue on Twitter here if I go and say you must be a great operator in order to be a
Yeah.
great VC. So I'm not going to say that, but I do think that having been in the in the role of a founder, I
Yeah.
read something the other day that said there's two kind of people in the world: those who had to make a payroll and those who haven't.
Hmm.
And it
Yeah.
completely changes you when you have to be looking at your accounts and saying, okay, I need to pay so and so, I need to pay such and such, I need to get such and such paid. And sometimes you don't get paid. Sometimes you don't eat so that they
Yeah.
can eat.
The
And
founder is always the last one.
that's right.
Yeah.
That's right. And so when I'm like I said, I was proud that I didn't lay anybody off. There are many, many, many weeks that I didn't get a check.
Hmm. Yeah.
And
I've been
so
through that same experience, and and it's hard too because no one thanks you for not taking a check.
no, no, no.
No
Because
one
they all
says
say
thanks for taking one for the team. They all say, well, why am I not being paid more? Why am
that,
and you're like, "Er."
yeah,
Yeah, it is a extremely tough job. And, I don't think, I think my greatest failure is what makes me able to help entrepreneurs. And, everyone on my
yeah,
team has been an entrepreneur before.
yeah,
And I don't actually really connect very well with people who have never done it because it's almost like we're both talking about business and startups, but we're on two separate planets when they haven't
Yeah,
actually done it before. There's a glint
100%.
and a recognition in the eyes between entrepreneurs who have really, really been through it that you don't get when you talk to someone who hasn't.
Yes, 100%.
Mhm.
My wife, I was blessed. As I lost the marriage in the recession, and
Mhm.
that was my first marriage. I'm highly blessed to have gotten another chance. And now my second wife, we bonded over entrepreneurship,
Mhm.
and she's an entrepreneur as well. And some people say, "Man, so you guys got a household and marriage, and nobody's getting a consistent paycheck."
You're like, yeah,
But
well,
you
yeah.
know, but there's things that we don't even have to speak about, that we understand about each other, and we understand the why, that we're working in our passion, and we're moving and walking in our purpose here.
Mhm.
And that's really important.
Yeah. Yeah, that's amazing. We could have a whole another topic about relationships
Oh
and
yeah.
entrepreneurs. We should do another podcast about that because I
Yes.
too got divorced back a long time ago. I was in my 20s, and it was the startup. And, I remember he said to me, I'll never forget. He said, I don't want to be married to an entrepreneur and I don't want to take backseat to a startup. And I was like, this is who I am.
This is who I am.
Yeah. And
That's what I mean
sometimes I
when I
wish
say
I
it's,
wasn't because it's would be way
listen,
easier. Yeah.
but that's what I mean when I say it's a vocation,
Hmm.
right?
Yeah.
And from a founder perspective, that's who you want to have investing in you.
Hmm.
Right? Not somebody who's like, well, it's super. Whenever I walk in a room and I say I'm a VC, like everybody sits up and pays attention to me,
Yeah.
because
Isn't that
it's super
funny? As
sexy to
soon
be a
as you're a
VC.
VC, it's like I can get into any event. I can get in
Yeah,
anywhere I want now. And I'm like, this is weird because it's
yeah,
strange. But yeah.
yeah.
Hmm.
And there are people that are in it for that reason, right?
Hmm.
And so,
Oh,
yeah,
I think one guy, like he wrote a post or something. He had made a business card that said asshole ventures and he went to South by and he got into all of like the events and the parties that he couldn't get into with his business card that said asshole ventures.
as whole pictures.
Hmm. Yeah.
Wow.
Yeah.
Yeah, yeah, yeah. I think that it's important. We talk about unresolved traumas. We talked
Hmm.
about developing a mindset, and I really work with founders and really talking about developing a mindset of abundance as
Hmm.
opposed to a lack mindset, because a lot of us don't come from money, and
Hmm.
so we have a different relationship, right, with
Yeah.
money.
Hmm.
And so, I think about when you get your birthday card when you're 10 years old and it's got $10 in it, what did they tell you to do with it?
Don't spend it all in one place.
Right.
Save it.
Put it
Yeah.
away.
Hmm.
They want you to put it somewhere where even you can't remember where it is, right?
Hmm. Hmm.
But this is right. This is the antithesis of what the most successful people do with their money.
Hmm.
And
Just
so
let it flow. Let
be
it
a
flow.
vessel. Be a
Hmm.
vessel for money. Money's
Hmm.
a tool just like a hammer.
You know, um, Blaine Bartlett said the same thing this morning. I think there's something in the air going on right now. He was talking about he gave the same example of the dollar, don't spend it all in one place, and was like, let it flow, let it flow. And, he was best friends with Bob Proctor and some of the great thinkers in, personal development. And this is something that I just feel like there needs to be more conversations had, especially with entrepreneurs about it,
Yes.
because we are conduits. VCs, especially, but entrepreneurs, we are conduits to abundance. We're creating abundance in the world, whether that is money or whether that is opportunities or whether that is, you know, you're
Access to healthcare.
landscaping and you're putting in
Yeah.
more plants. I don't know what you're doing, but all of us are in the business of creation and expansion. I have not
Hmm.
met a single entrepreneur who's in the business of destruction and contraction.
Hmm.
If I have, I probably don't like them. But yeah, exactly. Well, I would love to point people towards where they can connect with you, Armand. So
Yeah.
where can people
Um,
find you? Where can people look at your stuff, look at the Paragon Group? What's the hookup?
LinkedIn is easy. It's Armond, Armond, Davis. You can connect with me on LinkedIn. My
We'll put that in the
website
show
is
notes. Mhm.
paragoninvestmentfund.com. You can Twitter and Instagram. I'm on. But don't. send me. You can follow, but don't you don't have to. Don't
Please
send
do not
me your
send a
deck.
pitch. Yeah.
Please don't send me your deck on Twitter.
Yeah, that'd be weird.
I am accessible, so it's not like, oh, I could only get to you through Twitter. Like that's But yes, Instagram is I am Armond. Twitter is at Armond Davis. But yes, and I'm always looking to meet talent, even if it's not a fit in terms of investment. I recognize that really what we are in is in the talent collection business, right? Mm-hmm. And so I just want to meet and interact and get to know as many talented people as possible.
Awesome. Well, thank you so much for coming on today and sharing your wisdom with our audience. We call them the adventurers here.
Okay,
and
nice.
I'm going to go ahead and post all those links into the show notes. You can find this episode, of course, all major podcasting channels, YouTube, or adventurouspodcast.com. And that is our final episode, it's not the final episode. That is, that's wrapping up this episode. Okay, right. It's been a long day. And
missed it at the end.
And we'll see you guys all on here for the next one.